What's up guys, and welcome back to another Alibaba video. We are so excited about this one. This is something that has been on my mind for the last week or two, and I've been thinking about this a lot, and that is, how does Alibaba get to the next price high? How do they get to $500? And we can see from their chart here, they were at $310 back in 2020, October of 2020. So it's been a while since they've been up there, but what would it take for them to get up to potentially $500? And that's what we are going to be going over in this video here today. We're going to take a look at the PE ratio. We're going to take a look at where their earnings have been over the past and where they could go into the future. And then we're going to touch on a few hypothetical things that need to play out that really the business does not have control over. And we're going to go over all of that in this video here today. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So where has Alibaba been over the past couple of years? We can see here that Alibaba peaked out back in October of 2020, and it peaked out around $310. And that is absolutely a huge move up. There were a lot of things obviously going right at that time. We had gotten kind of through the pandemic and things were starting to turn a corner, and a lot of the world's economy, was starting to benefit from low interest rates. And what we can see obviously since then is that the market has crashed down. There's been a lot of concerns with China, right? There was US regulations that were passed that basically required auditing of a lot of Chinese companies. That destroyed the stock. We have had interest rates increase massively. That has destroyed the stock. And China has continued to lock down a lot of their economy over the last few years to kind of mitigate a lot of the pandemic. So that has also had a huge impact on the stock. And we are all the way down under $90, under $100, all the way down to around $80 right now. And that is obviously a huge move down. But what is it going to take for Alibaba to get back up to $300 and potentially even get to $500? I wanted to start off by looking at their PE ratio, because the PE ratio is something that I absolutely love. It tells you a lot about the company and where it's been at and where it's going potentially in the future. Right now, we've seen a lot of troubles with Alibaba stock and obviously the Chinese economy as well, as they've kind of started what could potentially turn into a similar recession to what the US saw in 2008, as the Chinese housing market has basically collapsed and gone completely down, and it's basically in a really bad situation. And the Chinese government is already starting to react in hopefully what could turn into a positive thing for Alibaba. But what we can see here is we want to go back and look at what was going on when Alibaba was at its peak. We can see a PE ratio here of 45. So that is kind of the high that we're, considering reasonable. Obviously, we've seen higher numbers in the past and honestly more recently as well. But again, these are kind of blown out of proportion because this has more to do with their earnings, decreasing, which obviously is not a good thing, but it has to do with macroeconomic trends that really the business doesn't have a whole lot of control over. And then here we can see where the low is. So that's also important. We can see that Alibaba actually has gotten down, at similar parts down to around a 16 PE ratio. 16, we're going to kind of say 17. So we can use those numbers to project where Alibaba could be headed if we see a PE ratio that, were to spike up to around 45. So based off that chart and based off the earnings that we have seen over the last few quarters, we can kind of project that the current PE ratio is around 15 to 20 is kind of what I've seen as reasonable. And if we were able to rebound all the way back up to a 45 PE ratio, we would see the price go from $80 all the way up to $211. So obviously that would be a huge move. That would get us close to the 500, obviously in a lot better position than where we're at now. That'd be over 150% return, but still not really at that $500 mark, not even halfway to that $500 mark. So what would it take for us to get even closer? So what can we do to get closer to that $500 mark? Here we are looking at Alibaba's earnings over a trailing 12-month period, and we can see back in 12/31 of 2019 that Alibaba had a trailing 12-month earnings of $9.37. When we take that $9.37 and pair it with the PE ratio that we mentioned, that we feel like is a high but achievable number for Alibaba of 45, we can get a price target of $421.65. So this is just taking the PE ratio multiplied by its potential earnings, and we can get a potential price for that. So that obviously gets us a lot closer to the $500 mark. But what will we need for these things to be achievable? What would we need for the market to justify a 45 PE ratio? And what would we need for Alibaba to get back to relatively high earnings that we've seen with this $9.37. So the first thing that needs to happen is China needs to turn their economy around. They are obviously in a very bad spot with kind of the mortgage crisis that they are going through. And what they are doing already is bound to help Alibaba, as well as hopefully prevent them from sinking into something similar to what we saw in 2008 with our housing crash. So China is already trimming their lending rates again, and they are doing this at a very slow pace, which honestly should be seen as a good thing, because obviously the US took a different approach. We lowered our interest rates very massively in a very short amount of time. China has taken a lot more kind of conservative approach to it, where they have been backing off their interest rates very slowly. We can see here that China has trimmed its 5-year loan prime rate to 4.30% from 4.45%, and its 1-year loan prime rate to 3.65% from 3.7%. So obviously not huge moves down in their interest rates, but these little incremental moves down over time will help their economy get kind of back on track, allow more money back into the economy, and overall should help benefit Alibaba. Another huge part of China's slow economy right now is the fact that they are shutting down cities and portions of the country all the time recently, and it seems like they're starting to get a little bit away from it as they've started to open up some of like their regions and keep them open a little bit longer, but they are still suffering from this. So we can see Macau Casino see another dismal month as China lockdowns widen. So I believe what I've heard is Macau has actually started to reopen up, and they're expecting a lot of growth, especially in terms of their revenue and everything, because they've been basically shut down. So they've had no income over the last few months, as you know, cases have risen in this region, and China has taken that stance of kind of zero tolerance towards the pandemic and closed down cities very quickly when they show signs of, you know, the pandemic becoming more severe in those regions. So overall, they need to kind of get away from this trend and kind of reverse this mentality and keep their economies open, and maybe implement more shots, vaccines, whatever they need to do to basically keep their economy open, because that has slowed their GDP growth massively over the last year. So both of those cover earnings and how they can get their earnings back on track. But how do they need to get investor sentiment back on track? How do they need to get back to investors being willing to pay a 45 PE ratio for a Chinese company? And the simple answer is these audits that are going on right now. They need these to go well. Overall, obviously, if they go well, China and the US can kind of start rebuilding a lot of these relationships, and US investors will feel a lot more confident investing in China. China continues to kind of break down those bridges year after year. They tend to, you know, make things more difficult and harder on their companies, but then they go through a period where they kind of relax for a bit, and US investors get, again, a little bit more comfortable with China and with investing in China. So they need these audits to go well overall, and that will help a ton for investor confidence regaining back in China. And the last point that I wanted to bring up is Alibaba Cloud. They are in an absolutely massive position where they need to execute over the next 5 years. They are actually third in the world behind Amazon and Microsoft in terms of having the largest cloud-based company. And what they need to do, and what China has kind of presented, is China is projected to have similar growth to what the US has had over the last 5 years over their next 5 years in the cloud and tech space. And what that means for Alibaba being in the #1 position in China in terms of cloud space is that they have a lot of opportunity to execute at a high level. And if they are able to do that, that will help massively to their bottom line and their earnings per share, and get them in a lot better position where they could even surpass that $9 mark. They could get even higher than that, and make, you know, some exceptions to the PE ratio, where the PE ratio might not have to get as high. It might only need to get to 35, and they could still achieve that $500 mark. So that is something that they have a very huge opportunity over the next 5 years that they have direct control over and need to execute on. So with all of that said, personally, I do own a lot of shares of Alibaba. I like the stock for the long term. The 3 to 5 year horizon on this stock, in my opinion, is absolutely massive. If we start to get some of these things to turn around, we see the audits go well, we see the Chinese economy start to turn around, and we see the US economy start to turn around, I think Alibaba is a stock that could spike up in an absolutely massive way, especially if behind the scenes they're also executing on their business plan, their cloud space, everything that they have going on. So I personally do like the shares and do like the company of Alibaba. And if you do, do your own research. Don't take the advice of someone on YouTube. Do your own research, look into all the numbers, make your own determination. And if you think it's a good buy, then buy some shares. If you don't think it's a good buy, don't love the company, then obviously don't buy the company. But overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.